Sir, fully active from home?
Yes. I've been doing webinars, almost 2 webinars per week.
Okay.
Shall we start?
Yes, let's start.
Start.
Milind sir, can we start?
Yes.
Yes.
Good evening, friends. I welcome you all to 15th episode of BDA's webinar series. We at BDA, with a great sense of satisfaction, assume that all our team's hard work to impart knowledge to the industry players is yielding results, and BDA's webinars are being appreciated not only by the developer fraternity, but also by other professionals, advocates, and entrepreneurs connected to real estate industry. Yesterday, BDA had a record-breaking webinar with Honorable Dharmadhikari sir with around 2,500 registrations and 1,500 attendees on Zoom and more than 1,600 people live streamed on YouTube. Today is no different. Around 600 registration on a complete developer-centric topic. This is a clear indication that we are going on a right track to achieve our objective for the betterment of the industry. Today's topic is much awaited in the developers fraternity and never talked about earlier. I'm sure all the developers are eager to understand the nitty-gritties of this LUC tax. I'll now call upon Mr. Harish Jain to briefly tell us the ongoing pains from a developer's perspective pertaining to LUC tax. Over to you, Harish.
Thank you, Deep. Good evening, friends. A very warm welcome to our chief guest, Shri Milind Satheji, sir. Our guest panelist, Jaideep Bhai, Kamlesh Bhai, our president, Shri Damji Bhai, and all the committee members and office bearers of BDA, and all the participants over here. I would like to welcome you to another webinar of BDA. Today's episode is on LUC. As Deep rightly said, we have been receiving tremendous response to our webinars. Even our first Gurukul training program that is based on DCPR 2034, exploring DCPR. Last but not the least, the redesigned website, BDA.Mumbai.com, being launched yesterday by Honorable former Judge Shri Dharmadhikari ji. We have put in a lot of efforts as BDA to stay relevant to our members' cause and pain points, and have been constantly receiving lots of feedbacks and positive thoughts and ideas and ways forward. We have incorporated on our websites, the newly launched website redesigned, a lot of concepts which can be viewed online. And coming up in line is the digital library on our website, as well as premium calculation model, a thought process which is on the way, which will be shortly available on the website. This exclusive benefit will be available to only BDA members. And overall, BDA is trying to be a kind of Google for the developers, for the redevelopers, wherein all the issues related to redevelopment in Mumbai, be it GST, LUC, MCGM issues, will be covered and will be taken care, and BDA will not stop all the members as well as redevelopers. In continuation to our feedback from our members, we have understood that LUC is a burning topic, land under construction, which needs much clarity, understanding how it's been calculated, how it's been charged, and things related to it. Since last few years, all the major associations in Mumbai are fighting for this, and Jaideep Bhai, who is present over here, has been fighting this in Supreme Court also and waiting for the results eagerly. We have on panelists our chief guest speakers who have not only in-depth knowledge inside, outside about LUC, but also he himself is fighting against it. Whether it is applicable on land component, on FSI sanctioned, or FSI permissible, etc. It has been a big burden on the developers without having any proper insight on it. So I really proud on behalf of BDA to welcome our chief guest speaker, Shri Milind Satheji, Senior Counsel, and our guest panelist, Shri Mulay Thakur and Jaydeep Bhai. A wholehearted welcome to all. Now I'd like Deep to take over and introduce Shri Milind Satheji, our chief guest, and take webinar forward. Thank you.
Thank you, Harish Bhai. I'm sure we have selected the best person for the topic today. So friends, we have with us none other than Dr. Senior Advocate Milind Sathe sir. Dr. Milind Sathe actually doesn't require any introduction, but when one looks into his achievements till date, it is surely tempting and worth sharing. Dr. Sathe has done BSc, LLM and PhD in law from Bombay University and has specialized in WTO and constitutional sovereignty of India. Dr. Sathe has also done his diploma in journalism, social services and business management. Dr. Sathe joined the bar in the year 1982 and is practicing at Supreme Court and Bombay High Court and was designated as Senior Advocate of Bombay High Court in 2005. Dr. Sathe has appeared in Supreme Court in large number of cases, including constitutional validity of public premises, constitutional validity of textile mills, etc. He has appeared before 9 judges bench on the issue of interpretation of Article 31 and 9th schedule of the Constitution. He has appeared before Honorable Bombay High Court, Goa, Aurangabad and Nagpur bench in several matters, including challenging of nomination of 3 ladies to State Assembly of Goa and constitutional validity of Amendment Act of 39th Constitution. Dr. Sathe is also member of Supreme Court Bar Association, SAARCLAW, International Bar Association, and is currently president of Bombay Bar Association, which is the oldest association of lawyers in India. He is also empaneled as a senior counsel for State of Maharashtra, Municipal Corporation of Greater Mumbai, and other corporations and public sector units. It's really a great pleasure to have such a highly learned personality with us today. Everyone is eagerly waiting to hear from you, sir. Over to you, sir.
Thank you. Thank you, Deep. Thank you, everybody. And good evening. The subject of land under construction is a facet of property taxation, which is a burning issue, not only for the developers, real estate, but also for landlords and tenants as well. It is equally burning issue and important issue for the corporation because it is one of their greatest sources of revenue, particularly after the octroi has been abolished and that has been subsumed in the goods and services tax. So before I elucidate on land under construction, I'll give a brief background about the concept of property taxation under the Mumbai Municipal Corporation Act. As all of you know, the Act is of 1888, much before India gained independence. So it's a pre-constitutional law, and it has continued the test of time even after 1950. And the same Act continues without any major amendments. The taxation which was introduced in 1888 virtually is same even today, except the new regime which has been brought about from 2010, that is shifting the basis of taxation from rateable value to capital value. But before that, what the property taxes ensued was in relation to what the corporation is empowered to levy the taxes. So I'll briefly elucidate on that. The corporation is mandated, and its mandate, it's not the discretion of the corporation. Corporation shall levy the taxes, which are of three kinds. One is a property tax, second is a tax on theaters, and the third is the tax on dogs. So we are not concerned with the other two taxes, but we are concerned with the property taxes. And property taxes has variety of components. Property taxes have about 6 components. One is water tax, second is water benefit tax, third is sewerage tax, fourth is sewerage benefit tax. Next is general tax, which is what we generally call the property tax, which is a major component of property tax. Then there is a street tax, education cess, and betterment cess. So these are the components of property taxes and which are levied by the municipal corporation. And the two charging section, as we call it in legal language, that are the section under which the corporation is mandated and authorized to levy taxes. So the charging sections are section 139 and section 140, which also continue to be the same sections even today after the regime has shifted from land under construction, from the rateable value to capital value. So the normal system is before 28th of March, the municipal commissioner is supposed to submit the proposal for taxation for the next year. And what the commissioner is supposed to do is, he's supposed to prepare budgets and estimates what the corporation is required to spend in the next financial year. So whatever the duties of corporation, which are again enumerated in the Act, of maintaining the civic administration, that is hygiene, streets, water supplies, sewerage, etc. These are all the duties of the municipal corporation for which corporation needs to raise fund. So he is supposed to prepare the budget estimates and submit a proposal that how much taxes are required under each head. So those budget proposals are submitted by municipal commissioner to the standing committee under section 128. So that's the starting point. So the standing committee considers those proposals and makes changes or amendments in municipal commissioner's proposal, and then those proposals are submitted to the general body of municipal corporation, that is the body of elected corporators. And they pass that resolution proposal which is submitted, which has come to the corporation through municipal commissioner and standing committee. And that is how the taxes for the next financial year are prescribed by the municipal corporation. Basically, they have the budget estimates and they decide what the rate should be so that they can generate sufficient revenue for enabling municipal corporation to discharge its functions. So that is how the system works. Now, how the taxes are designed is, the basis was prior to 2010 is the rateable value. Rateable value in simple terms means if you have a property, if you let out that property in the market, what is that it would reasonably fetch? So that is the rateable value of the property. So if you have, even if you don't have a tenant, you have to consider a hypothetical tenant. If you are able to rent that property to somebody, what is that hypothetical tenant would pay you as a landlord? And that would be the rent which would be received from that property. Then that is the basis on which the rateable value is determined. So that becomes the basis of the taxation in municipal corporation. So you have the rateable value determined, and on that basis, a percentage of that rateable value is levied as property taxes. Now, all of you know that in view of the freezing of rents under the Bombay Rent Act from 1939 and then under the Bombay Rent Act of 1947, the rents were frozen. So therefore, under law, the rent which could be recovered was frozen under the Rent Act. So therefore, under section 154, which is the prescribed procedure for fixation of rateable value, the arguments were made before the courts that once there is a standard rent prescribed under the Bombay Rent Act, the rating cannot be more than the standard rent. And the courts have accepted that. So therefore, in the areas where there are rent laws under which the standard rent is prescribed, the rateable value will be decided on the basis of standard rent. So therefore, virtually in Bombay, from 1947 till 2000, the rateable value was determined on the basis of standard rent, not on actual rent which you could receive or which you actually received, even if you were getting it more than the standard rent. So you have a standard rent on the basis of which the rateable value was decided. And a percentage of that rateable value was levied as property tax. With the result, what happened was the rateable value remained frozen from 1947 till 2000. And therefore, what the corporation continued to do was from 1947 till 2000, they increased the rate of tax. And therefore, the rate of tax which began in 1947, perhaps with 2% or 3% of a rateable value, or towards water tax or sewerage tax or general tax, had become 300%, 600%, and 900% of the rateable value, because rateable value was frozen. So that is how the regime operated from 1947 till 2000. In 2000, when a new Rent Act came into force, there are a large number of categories of buildings and landlords which are exempt from the purview of Rent Act. For example, a company whose whose paid up capital is more than 1 crore, that company is exempt from the, or is not entitled for the benefit of Rent Act. So if you have a tenant which is a company whose paid up capital is more than 1 crore, that company is not entitled for exemption from Rent Act, and you can evict that tenant without assigning any ground under the Rent Act by following the normal procedure under Transfer of Property Act. So therefore, there were two classes of tenants which were created post 2000. One, a class which was still protected by Rent Act, and therefore the rents were governed as standard rent under the Rent Act. And there was a second category of tenants whose rents were not anymore protected. They could be market rent, and therefore they were not the standard rent. So then question came before the high courts that now what should be the rateable value? Should the rateable value be decided on the basis of standard rent available within municipal corporation area, because there is a Rent Act and we have a standard rent possible, or there should be a category of people who are not covered by Rent Act? In respect of them, rateable value should be decided on the basis of actual rent received, or leave and license basis, whatever rent or compensation you receive. Now, this litigation went on in a popular case which all of you possibly know, known as Dalamal Tower Society of Nariman Point. And that litigation went from single judge to division bench to Supreme Court. Supreme Court remanded it back, and then again there was argued before two judges. They differed. Therefore, it was referred to the third judge, and eventually the judgment came by 2009. And Supreme Court, the Bombay High Court has said that in respect of buildings in which there are tenants who are not protected by Rent Act, there can be three sets of rateable value. One, the rateable value in respect of occupants who are protected by Rent Act, the second category of occupants who are self-occupied, and the third category who are not protected by Rent Act. So we have a piquant situation in a cooperative society or commercial cooperative society like at Nariman Point. You have three sets of rateable value in one building. Now that's something which was not suitable, which is not ideal situation in one building to have three rateable values. So three sets of people pay different kind of property tax because their rateable value is different because of the operation of the Maharashtra Rent Act of 2000. Now, so this was the system which was in force till 2010. And therefore, there was a demand from everybody, including from the real estate, the commercial, the Builders Association or Real Estate Association or Chambers of Industry and Commerce, etc., to have a different regime. And that's how the new regime of capital value has come into being with effect from 1st April 2010. Under this system, the rateable value has been substituted with capital value. So the capital value, in a way, is a better system, and it takes care of these discrepancies between who is occupying the property, whether a person is protected by Rent Act or not. All those factors have gone away, and that is how ideally the situation should have worked, in the sense, what is the age of the building and what is the capital value of that building, or what is the capital value of the land. Now that ideally should have been the situation post 2010 under the capital value regime. But under the 2010 and 2015 rules, there have been a lot of discrepancies, and that is what we are going to discuss, and particularly with emphasis to land under construction. So the new regime of capital value system, which came into force from 1st of April 2010, the rules were not framed. Rules were framed only in 2012, with effect from 1st April 2010. So between 2010 and 2012, whatever was the rateable value prior to 31st of March 2010 became the ad hoc capital value of the property. And post 2012, they were supposed to prepare the rateable capital value of each property and then levy the taxes accordingly. Now, this was supposed to be a non-discriminatory and fair regime of taxation of property tax under the Mumbai Municipal Corporation Act, and that is what was expected. Now, under the Mumbai Municipal Corporation Act, under the taxing the sections which I mentioned to you earlier, that is section 139 and 140, all that it mentions is land and buildings in Mumbai Municipal Corporation shall be subjected to levy of property tax, and property tax has about 6 or 7 components which I mentioned. So what is subjected to tax is land or building. Now, whether a land and building are only 2 categories or they can be different categories, because you can have a vacant land and then until it has a constructed building which is ready for occupation and legally ready for occupation, in the sense it has occupation certificate, what is the status of that building? Now, this issue, that is land under construction, that is vacant land turning into a building, a legally occupiable building, that has come up not only under the capital value system, but it has been a raging issue even in respect of rateable value. As back as in 1974, the Mumbai Corporation had gone to the Supreme Court against the decision of Mumbai High Court, coming from the Small Causes Court appeal, in case of Polychem Industries, which is a very celebrated judgment on this land under construction issue. And the argument which was made before the Supreme Court and Bombay High Court was that once the land is put under construction, it has no value. In the sense, it has no real commercial value. It has become sterile land because you cannot occupy the land which is under construction and therefore let it out. Because under section 154, the rateable value has to be decided on the basis, what would you get in the market if you let out this property? And the argument was that nobody is going to rent a property which is under construction, and therefore from the moment construction begins, the property cannot be let out until it is legally occupiable with occupation certificate. And therefore, for that matter, there should not be any rateable value, and therefore there should be no property taxation. So this was the argument made on behalf of the landlords, the owners of the property. Supreme Court rejected that argument. And Supreme Court said that there is no concept of sterility in India. The land or building cannot become sterile because you are not in a physical position to occupy or rent it. So therefore, the legal status of the land continues to be the land, and therefore it would be taxed or considered for taxation only as a land, and there is no category as land under construction. So therefore, prior to 2000 and even today, that continues to be the legal position. What can be subjected to tax is only the land or a building. And building means legally occupiable building with an occupation certificate. So till building is completed with occupation certificate, the status of that property for the purposes of property taxation is only land. That is the law laid down by Supreme Court way back in 1974. And that law continues even today, even under the capital value taxation regime. That's very important because under the Municipal Corporation Act, there is no third category except land and building. In fact, there is a judgment of Supreme Court again in 1972 in case of ANZ Greenlace Bank, where the Supreme Court held that when a building is constructed on a land, then what is assessed by municipal corporation is both land and building constructed thereon. So what has gone into the taxation for the purposes of rateable value is both land and the building. So when a building is assessed after it is legally occupiable, the assessment of rateable value includes the land component as well as the building component. And therefore, legally and technically, if you demolish the building, rateable value must come down, because earlier the land and building both were assessed to rateable value. Once the building is demolished, the rateable value technically should come down. That was the argument made and accepted in some cases, but it all again depends whether the value actually comes down or value remains the same or value increases. But the point is that what is assessed and what is subjected to taxation is only either as a land or a building, and therefore there is no category as land under construction for the purposes of assessment of property taxes. That situation, that legal position continues not only under the rateable value regime, but even under the capital value regime. Now, this has been going on even after this judgment of Polychem. The municipal corporation continued to assess the properties as land under construction. And then a judgment of Bombay High Court was rendered in Rialto Cooperative Society's case, where the Bombay High Court judgment delivered by Justice Lodha reiterated that there is no category as land under construction, and corporation must assess the property either as land or as a building. And there cannot be building on the land until it has received occupation certificate for the purposes of assessment. Now, corporation was in a piquant situation because they used to actually, in cases of land under construction, calculate what you are going to construct on that building and consider the rateable value of what you eventually would construct and let it out. So what they are now doing under the new rules also, they used to do under the rateable value. And imagine a rateable value of a proposed building on that plot. Now, this was struck down by the High Court, saying that you have no jurisdiction to assess the land under construction. Now, thereafter, what corporation started doing was, corporation decided to change the brand and they deleted the phrase land under construction. So what they started doing was that in a year when a building is demolished, old building is demolished on a land, then they said, we are assessing you as a land, but your rateable value from, if it was earlier 100 rupee, we are increasing the rateable value to 500 rupees. So now that became that ceased to be a jurisdictional issue. So people used to come to High Court and say that the corporation is assessing us as land under construction, which is not permissible in view of Polychem judgment. Corporation would come to High Court and say that we are not assessing you as land under construction. In every financial year or assessment year, we are technically entitled to revise the capital value. You should have a basis and then you should follow the procedure of giving notice to the landlord for reassessment or changing the rateable value in the assessment book. So corporation would say that in the year when you demolish the building or you started construction on open plot of land, we are changing the valuation of land. We call it value of the land only for the purposes of rating. So therefore, our rateable value for the land has increased from 100 rupees to 500 rupees, and therefore it ceased to be a jurisdictional point. And then they would successfully resist the writ petitions in the High Court, and they would say that since this is an issue of only valuation, whether it should be 100 rupee or 500 rupee of a rateable value of a land, you should go to small causes court in appeal under section 217 of the Mumbai Municipal Corporation Act. And the difficulty in going to small causes court is that you must deposit the entire taxes payable before your appeal is heard. So it becomes a very rigorous and onerous alternate remedy for the landlords or for the developers. So that was the system from 1997 till 2010. So the corporation tided over the situation that land under construction, they stopped calling it as land under construction, and they said, we are only changing the value of rateable value of the land because it is now, it has changed the status. Either the open land has become constructible land because you have leveled it or whatever other activities you have done. Therefore, we are changing the rateable value of land. Or if you have demolished the building and made it vacant and started construction, then also corporation would say, we are only changing the rateable value of land and therefore we are entitled to do that. We don't call it anymore land under construction. Now this continued, this tussle continued because the real effect what the corporation was doing was they were actually charging you what you were planning to construct on that property. So in reality, even though they called it land, they called it assessment of land, in reality, they made the rateable value of the proposed building. Now that was being done even prior to 2010 under the rateable value regime, and there were a large number of litigations pending. Now under the 2010 regime, we thought that there would be complete shift and there would be transparent and fair regime of taxation because capital value is something which is neutral to the person occupying, which is neutral to the owner of the building, which is neutral to whether the person is protected by Rent Act or not protected by Rent Act. But unfortunately, that did not happen. There are two rules which are important rules under the 2010 rule and 2015 rules, which have been which are coming in the way of the assessment of land under construction, even for the purposes of capital value. So these rules provide, basically rule 3 provides that the capital value of open land will be determined in terms of rule 21. And they have defined open land to mean land on which there is no building except the land appertaining to the building. So if you have a plot of land of 1,000 meters and on that there is an existing building, then they would say that a building of 400 building is constructed on a plot of land, say of 300 square meters is a footprint. Then appurtenant land to that building would be excluded from that. So it comes to about 500 meters. So therefore, balance 500 would be considered as land for the purposes of fixation of capital value, and 500 meters of land would go with the building. So that is how the split is done insofar as the land on which there is partly a building, which is partly built up or partly vacant. If this is an open plot of land, then there is no difficulty. But in a partly constructed building, they exclude the land which is appurtenant to the building to decide how much is the vacant land. The definition in the rule also says land includes land built upon as well as land being built upon. So therefore, they have added the category of land under construction in the definition of land in 2010 as well as 2015 rules. The real issue which has come up is in Rule 21. Rule 21 of both 2010 as well as 2015 rules have provided that for the purposes of calculating the capital value of the land, they have devised a formula. And that formula is the base value of the land as per the Reddy-Reckner. Now, Reddy-Reckner, all of you know, is prepared under the provisions of Bombay Stamp Act. Now, Bombay Stamp Act is a taxing statute and for which under which levy of stamp duty is collected on instruments. So if there is an instrument like a conveyance or agreement or whatever, on that, on the consideration, the stamp duty is levied. Stamp duty is levied on the true market value of the property. Now, Reddy-Reckner prescribes the standard rates. So if you pay the stamp duty on the basis of Reddy-Reckner value, then the collector will not question you. If your agreement value is more than the Reddy-Reckner value, then of course you have to pay stamp duty on the agreement value. But if your agreement value is lesser than the Reddy-Reckner value, you need to pay stamp duty on Reddy-Reckner value. Section 154, which has now provided machinery for fixation of capital value, provides that the commissioner may make rules, and while making these rules, he will take into consideration the Reddy-Reckner values under the Reddy-Reckner prepared under the provisions of the Bombay Stamp Act. So that is what the regime provides under Section 154. But the rules which are made by the commissioner under the in 2010 as well as 2015 have provided that the capital value of the land will be calculated by applying the following formula. Base value, which should be actually the only capital value of the land, that is multiplied by the factors which are prescribed in Rule 21 along with the schedule. And those factors are depending on the user category. Now, there are user categories which are prescribed in the schedule. Now, those user categories include the lands which are used for airport or golf clubs or the playgrounds or industrial or commercial or residential zone. So you have a base value of the Reddy-Reckner. Now, in law, the capital value should be only based on base value of the land under the Reddy-Reckner. Now, that's where the problem lies, which is hurting everybody. So the base value is taken and that is multiplied by a variety of factors under the rules, which actually should be the only base value, because land has a base value that should be the capital value of the property. So under the rules, that base value is multiplied by user category. User category has, as mentioned, various categories in which there is a multiplying factor given. So if the multiplying factor for, say, commercial user is 1.5, then base value of 100 will be multiplied by 1.5. So automatically your capital value goes from 100 rupee to 150 rupees. There is another multiplying factor in respect of FSI. So if your plot has FSI of 1, 1.33, 2 or 3, then that is again multiplied. So you have a 100 rupee base value. 1.5 is the multiplying factor for the user category, that is commercial user. So 100 becomes 150. That is multiplied by the FSI. Suppose FSI is 3, then 150 will be multiplied by 3. So it becomes 450. And that is multiplied by the area of the land. So that is how your capital value of land is determined. Now this is clearly impermissible, because if the standard ready reckoner rate provides the base value of a land, that alone should be the capital value of the property as a land. Now that is multiplied by the user category, and that is multiplied by the potential FSI of that property. If you submit the plans, they take those plans, whatever you have submitted. If you have not submitted the plans, then they take the maximum potential which you can construct on that property as a multiplying factor. So therefore, you technically, your 100 rupee base value can become 400 rupees, 500 rupees, which is clearly impermissible. But that is how, under the rules, the whole system is operating now. Now, this rule was challenged, as all of you know, in the challenge which was raised before the Bombay High Court to the capital value system. Now, capital value system introduced from 2010 was challenged in Bombay High Court on 3 or 4 grounds. The first and foremost ground was that the capital value system could not have been introduced by the amendment because that amendment is contrary to the constitutional provisions of Chapter 9A, which relate to the Panchayat Raj system, that is municipalities, which was introduced by 74th Constitutional Amendment Act. That challenge is, of course, rejected by the Bombay High Court, and Bombay High Court has said that is permissible. The second challenge was that this entire system should be devised by the corporation, and corporation means the whole corporation of elected body. And there is a delegation made by under the rules to standing committee or municipal commissioner. For example, water tax, water benefit tax, sewerage tax, sewerage benefit tax is levied under the rules made by the standing committee, not by the corporation. And the rules for fixation of capital value are made by the municipal commissioner. So this is clearly impermissible under the Act, because this whole function must be discharged by the municipal corporation itself, that is the elected body. That challenge is also rejected by the Bombay High Court. The third important challenge, which was in relation to the land under construction and in respect of the rules, and particularly the validity of rules 3 read with rules 20, 21 and 22, which I mentioned, under which these factors and formulas are prescribed. The High Court has said that under section 154, when the municipal commissioner is required to frame rules in accordance with and in conformity with the ready reckoner value, he cannot make the rules and say that I'm ignoring the ready reckoner values and adding something to those values to decide the capital value of the open land or land under construction. And therefore that rule, those 3 rules, rules 20, 21 and 22, have been declared by the Bombay High Court as unconstitutional. With the result, the corporation is directed to reassess all the property taxes in respect of the capital value system which has been introduced. The Bombay High Court has said one more important thing, that the capital value system came into force on 1st of April 2010, but the rules were made only in 2012. So what they did after 2012 was they refixed the capital, they fixed the capital value post 2012 for the years starting from 1st April 2010. So the High Court has said you cannot have retrospective levy of property taxes. As all of you know, a property tax must be levied in that financial year or the assessment year. If there is an amendment has to be done within that assessment year, and it cannot be done subsequently. So the retrospective levy of property taxes is not permissible. So the High Court has said the 2010 rules cannot apply from 1st of April 2010. So therefore, in reality, what would operate is up to 2012, the old rateable value regime would continue to operate, because the law has provided that till the capital value is fixed, the rateable value operating earlier would remain as a pro tem capital value. So that is what High Court has said, that you cannot, under these rules, have the retrospective taxation of property tax on the basis of capital value. That is the third thing High Court has said. And more importantly for our today's discussion in respect of land under construction, High Court has said following the judgments in Polychem's case, the High Court has said that the ready-reckoner value must be followed because that's a mandate of the statute. The commissioner, while making rules, cannot deviate from the statutory provisions of section 154. And therefore, if the rules now provide that I will multiply the ready-reckoner value by the user category as well as FSI, that is clearly impermissible. And if the Bombay High Court judgment is implemented, your grievances all would be resolved, because then in that case, the capital value of the property under construction or open land would be the base value of the market value as provided in the ready reckoner. That would actually take care of all your problems if the Bombay High Court judgment which is delivered is upheld by the Supreme Court insofar as this aspect is concerned. And this is the only aspect on which the High Court has given relief in the property tax matter, which is a huge relief in respect of land under construction. So coming back to this aspect of land under construction judgment, the assessment of land under construction must be done as follows. All category of lands, whether it is a land which has become vacant by virtue of demolition of a building, or because the building had collapsed, or you have started new construction on that open plot of land, all those categories would be considered as open land only. There is no category as land under construction permissible for levy of assessment, because that concept of land and building has not undergone change. That has not been amended even in 2009, 10 and 12. And therefore, what can be assessed by municipal corporation is only land or building. So therefore, until the building is in a legally occupiable position, which is with occupation certificate, what can be assessed as the property can be assessed only as land and not land under construction. That is one. Two, as a result, the base value of the land alone should be the basis for fixation of capital value. And there cannot be any multiplying factor, because there you are adding imaginary value and you are frustrating the purpose of fixation of capital value. So you cannot apply the user category also, because there is no use of the land for that category. Suppose the land is for industrial user or commercial user or residential user, that use is not put in operation on the land until the building is constructed and building is put to that use. And therefore the land cannot have a user category. So the land cannot have a multiplying factor of user category. Land cannot have a multiplying factor by FSI, because that is not what you are utilized. That utilization can happen only when the building is ready by utilizing that FSI which has been prescribed under the DC regulations of 1991 or now DCPR of 2034. So therefore, for the land, it has to be only the base value of the land as prescribed under the ready reckoner made under the Bombay Stamp Act. So that's the import of the Bombay High Court judgment. Now that judgment has, unfortunately, Bombay High Court judgment made one observation. There were about 200 petitions, and while the petitions were pending from 2010 till 2019, when last year judgment was delivered, there were interim orders passed by the Bombay High Court which had said that you continue to pay the old taxes which were payable on the basis of rateable value, and you pay 50% of the taxes which are differential amount. So suppose your taxes on the basis of rateable value were 100 rupees, and now the taxes demanded were 200 rupees, then you are required to pay 100 rupees or the original taxation plus 50% of the new taxation, that is 100 rupees. So you are required to pay 150 rupees. And that set of interim orders operated from 2014 till 2019 in respect of not only the petitioners, but everybody in Mumbai. So as long as you paid the 50% of enhanced taxes on the basis of capital value fixation, you were not required to pay additional taxes, or you were not required to file appeals to the highest, to the small causes court, and that interim orders protected. Unfortunately, when High Court disposed of the writ petitions in April of 2019, High Court said that the interim orders now, after the judgment, would operate only in respect of those persons who had filed petitions in the Bombay High Court, though the interim orders were operating generally for everybody in Mumbai Municipal Corporation area. Now, this matter has been taken to Supreme Court, as all of you know, by both the private owners as well as by the municipal corporation. And the Supreme Court has continued the interim orders, which were operating from 2014 till 2019. Initially, they were continued in respect of the petitioners, but subsequently, the Supreme Court has continued those interim orders, not only in respect of the petitioners before the High Court or petitioners before the Supreme Court, but generally as they were operating prior to 2019. So therefore, the interim order which is operating today in respect of property taxation in Mumbai is this, that you continue to pay the taxes on the basis of old regime, that is the rateable value regime, and you pay 50% of the enhanced value. There were certain other issues which were raised, that if there is a building which is constructed for the first time or assessed for the first time post 2010, then there is no old tax. Then how do you calculate the differential amount of to be paid? Now, in that case also, the courts have held that you now therefore pay only 50% of property taxes if there was no taxation prior to 2010. So that took care of the second scenario. The third scenario, where the High Court had refused interim orders, was the buildings which were ready, either under the redevelopment schemes under 33(7), that is the SEST buildings, or the slum buildings under DCR 3310, etc., where you sought occupation certificate. The High Court said you cannot apply this formula of paying 50% because now you are handing over the property to the occupiers. So in the event there is a future liability and the Supreme Court or High Court decides against you, and there is a future liability, that liability should not be fastened on the occupiers currently occupying the building. So only that category of building where you sought occupation certificate of a building, the High Court directed that entire taxes must be paid, and this formula of paying 50% differential amount alone would not operate, only on those cases. But otherwise, those interim orders have continued. Now, in respect of land under construction, there are two other important factors which arise in respect of water tax, water benefit tax, sewerage tax, and sewerage benefit tax. These taxes are, again, as I mentioned, are levied under section 140 and 141. And they say that these taxes are subject to sections 169 and 170 of the Corporation Act. So there are two kinds of taxes: water tax and water benefit tax, and sewerage tax and sewerage benefit tax. The operation of both these taxes is almost identical or pari materia. Section 169 says water tax, again, a certain percentage of rateable value and now percentage of capital value will be payable in respect of two categories of buildings. One, the buildings to which there is a water supply provided by corporation. And second, the buildings are situated in area where the building may not have water supply from corporation, but commissioner has given a notice that water supply from municipal corporation is available. To such a building, water tax would be leviable. In case there is a water supply which is a metered supply, it would be charged on the basis of actual measurement. In other cases, it would be charged on the basis of percentage of rateable value. Similarly, sewerage tax and sewerage benefit tax is also levied on the basis where the building is connected to municipal sewer system, or if it is not connected to municipal sewer system, the corporation has given notice, the commissioner has given notice that the sewerage system is available in that area, and therefore, even if you don't connect your building to the municipal sewer system, the sewerage tax would be leviable. And if there is a connection, then in that case, on the basis of water supply by meter, then it would be charged on the basis of actual metered water supply. Otherwise, it would be charged on the basis of percentage of rateable value. Now, in cases of land under construction, huge problem arises once the building is, there is a plot of land on which there is a building is demolished, so obviously there is no water supply, there is no sewerage connection because there is no building. Yet the municipal corporation charges water tax and sewerage tax on that property of a percentage of capital value. So to begin with, the capital value of land is enhanced by variety of factors, as I mentioned, the user factor as well as the FSI. So the capital value of a property, base value, is increased by 4 times. As I mentioned in the illustration which I gave you earlier, 100 rupee base value of a land becomes 450 rupees because it is multiplied by user category and it is multiplied by the potential FSI. So 100 rupee becomes 450 rupees, on which not only the general property tax is levied, but also water tax and sewerage tax and water benefit tax and sewerage benefit tax is levied, even though there is no water supply to the property, because while under construction, there is no water supply, there is no sewerage supply. You of course have the construction connection for the water, for which you pay separately or you make your own arrangements for water supply during construction. But in law, it becomes a harsh taxation because there is no water supply, there is no sewerage supply to a plot under which the building is under construction. Unfortunately, this challenge that they cannot be levy of water tax, water benefit tax, sewerage tax or sewerage benefit tax on a plot which is under construction has been rejected by Bombay High Court. So therefore, that issue is challenged by the developers in the Supreme Court in the property tax matter which is pending. So water tax and water benefit tax is payable even if it is land under construction. So on that, the High Court has clearly held against us that water tax and sewerage tax is payable. But if we are able to get the relief on the basis that the capital value cannot be artificially enhanced by applying the user factor and the FSI, then in that case, there would be great relief because the taxation burden would come down, even if the water tax and sewerage tax is actually levied on that property. So that is another facet in respect of land under construction. Now, there are a variety of other issues which arise from land under construction, particularly in respect of redevelopment of lands under 33(7), which all of us know is in respect of the CEST, category A CEST building in Island City, or the municipal corporation buildings or police colonies, etc. So they are redeveloped under 33(7), or MADA properties, MADA layouts, which are redeveloped under DCR 33(5), or the slum properties which are redeveloped under 33(10). In respect of those properties, particularly in slum properties, the moment you submit plans, the municipal corporation starts assessing that property for the capital value on the basis of the formula of open land which I mentioned earlier. So you have this situation that you take a slum scheme either on the government property, municipal property or MADA property, on which for all these years nobody is paying any property tax. You undertake a slum redevelopment scheme, submit the scheme. The moment your plans are approved, the corporation starts assessing this property in your hands because you become the holder of that property or occupier of that property technically, because you start redeveloping that property, and they start levying. So you have no incoming flow of in any respect because your sale component has not started. You're only developing first the rehab component, yet a huge property tax burden comes upon that. But that is something which association has to take to the authorities to change the taxation regime. But the issue is that corporation not only charges the base value, multiplies it by a variety of factors, but also adds water tax, sewerage tax, etc. in respect of some project which you have undertaken, which is yet to fructify, yet construction is to come up, and that becomes a harsh taxation and disturbs the entire economical and financial balance or the calculations of your project. So that's broadly the structure in respect of land under construction. So to summarize, insofar as land under construction is concerned, the regime which prevailed prior to 2010, that is, you can assess only land or building. There is no category such as land under construction, continues to be valid regime. That is one. Two, the corporation cannot artificially change the concept of land and say that we are only enhancing the value of the land to add what would be possibly constructed on that land, to add the future potential of that property. That is not permissible. That was not permissible prior to 2010 also. Post 2010, under the capital value regime, the multiplying factors which are added under Rule 21 and the schedule to say that the base value of the land will be multiplied by user factor and by FSI potential. That is not permissible. That rule, in fact, has been struck down by Bombay High Court as being unconstitutional, violative of Section 154 as well as violative of Article 14 of the Constitution. So therefore, in reality, on this issue, the High Court has held in favor of the association or the property owners that the land under construction cannot be artificially assessed to or fixed for capital value on the basis of imaginary factors, future potentials, etc. Now, that judgment, of course, is challenged in the Supreme Court, and subject to the outcome of the Supreme Court decision, that would be, but the entire eventual result would ensue. But the Polychem judgment, which I mentioned, or Kamla Mill's judgment, which is also another judgment which Supreme Court has delivered in 2004 on this issue, when the building is demolished, how the vacant property should be assessed. They followed Polychem judgment, or series of other judgments on the basis of which the land under construction concept has not been accepted as an independent category for taxation, for which there can be different regime. That continues to be valid regime even today. But unfortunately, today still the taxes will have to be paid on the basis of the interim orders of the Supreme Court until the final decision of the Supreme Court is rendered in the Property Owners Association matter in respect of validity of capital value regime. So that's broadly the perspective of the land under construction taxation and the judgments of the Bombay High Court. Thank you.
Thank you, sir. Thank you, sir, for showcasing such a crystal clear picture of what LUC tax is all about. I'm pretty sure majority of confusions pertaining to this complex LUC tax are now clear. Before moving to question and answers, sir, we have with us Mr. Kamlesh Thakur, who was past Joint Secretary of NAREDCO and have done immense study on this subject. He has also represented on behalf of NAREDCO to concerned departments regarding this issue. I would like to call upon Kamlesh Bhai to speak something about his experience while representing to the department and also show an example of how the rates are calculated and how the LUC tax is levied. Kamlesh Bhai, I request you to please take over.
Thank you. Thank you, Milind Bhai. It was such a informed presentation. In fact, even I also learned a lot of technical and legal aspect of it. And since we have a limitation of time, I would like to just rush through my presentation, though even I also had a lot of things to share. But before I share, I would like to give 3-4 minutes of the background. What happened? Why did we migrate from CV, rateable value, to capital value? The rateable value, which was what you were mentioning, was happening prior to 2010, was happening because of the earlier act. And what was happening? The taxation were getting frozen in real time. With this, the suburbs like Mulund, Bhandup, Kandivali, Borivali, they were paying more taxes compared to a better suburb like Bandra or Dadar or Matunga or even South Bombay. Their taxes was coming to 40 paisa, 30 paisa a square foot, whereas a suburb like Mulund was escalating because the construction was in the later year and it was going up to 3 rupees a square foot. Corporation then wanted to rationalize these taxes. They approached to TCS. TCS came with a suggestion of bringing capital value system, which was more robust and it was on the principle of equity. They wanted to do away with this manual and arbitrary fixation of the value, which the inspector, earlier we used to go to the inspectors and they used to fix the arbitrary rateable value. The builder who had knowledge, who had little awareness, could deal with them and manage to keep the rateable value in check and control his property taxes. Subject to various court orders, which you have mentioned, Polychem and all, which were challenging the existence of land under construction, LUC. Department went on modifying that to LBBU, land being built upon. They again was challenged. Then they went to plot of land and then land, and subsequently capital value system. When the capital value system came, the entire principle, the way how we moved from various taxes to GST, the same concept of capital value was to rationalize the tax. Rationalization means suburbs like Mulund, Bhandup, Borivali, Kandivali, which are less in value and being charged 3 rupees or 2 rupee 50 paisa square foot will be reduced. And suburb city, South Bombay, which was paying 30-40 paisa, will be enhanced so that there is a rationalization of taxation without impacting the gross revenue of municipal corporation. And the formulas and every concept was developed. The system, when it was in the proposal stage, was brilliant. It was robust. It was on the principle of equity. What happened when the politicians started interfering and intervening? There came a concept during 2010 and 15 that certain segment up to 500 square foot will be given free of cost. No taxes will be given. This is where the problem started. And these officers were asked that now you make the political wish without impacting the gross collection from this. And when they started doing this, the officers also started tweaking the various formulae. And that is how the concept of FSI and multiplication factors came. And this is what I'm going to share. And just because the population of builder, which is handful compared to a population of city like Mumbai, it is easier to deal with a commercial profit driven institution like builder. उनको हम निपट लेंगे, इतनी बड़े masses के साथ हम लोग पंगा नहीं करेंगे. इसलिए रेसिडेंशियल फैक्टर, जो रेसिडेंशियल अपार्टमेंट में जो उन्होंने फैक्टर्स लाए और जो लैंड के अंदर फैक्टर्स लाए, there is an arbitrage, and this is where the differences started coming. And when these facts were highlighted to the officers, they sympathized with us, but then they said we are helpless. And now that since the matter has gone to court, there is a technical issue. The period in the discussion, deliberation and communication from 2010 to 2015 passed, and when 2015 to 2020 has come, now there is a saying that retrospective withdrawal and reverting of these tweaking, which so-called tweaking which they did, will result into an budgetary and technical issue. So how can we now refund the payment to the various people? So आप कोर्ट में जाइए, कोर्ट से आप अपना जजमेंट लेकर आइए. If you succeed, we cannot help it. If you fail, we win. So this is the attitude of the officers. We at NAREDCO, MCHI, CREDAI, all of us came together. We made number of representation to Chief Minister Fadnavis sir, Municipal Commissioner Ajay Mehta sir, and various officers. They understood, they sympathized, but they also had their financial compulsions, and they expected the builder has to keep selling to us. So this is the small background which I gave to you. Now coming to the presentation. Yeah.
Kamlesh bhai, can we quickly move through the calculations? We have some time constraint.
Mr. Chheda, I would like to clarify certain things, so give me 5 minutes on
yes,
that.
Yes.
Yeah. So now if you see, can you move the sheet? Deepai?
Yes.
So multiplication factor, if you see, can you move the sheet? Just keep the slide moving. No? So multiplication factor was introduced in case of land. Land multiplication. Can you show the slide, Deepai? Yeah. The multiplication factor is 1. Whereas in the case of residential apartment, which is built on the land, the multiplication factor is 0.5. So this is how the tweaking was done. So straight away, a 100% increment or double for land, the valuation became. This is explanation of the fact that जब हम लैंड बना रहे हैं तो हमारी जो कंस्ट्रक्शन कॉस्ट और हमने कोई फैसिलिटी ली नहीं है तो हमारी टैक्स ज्यादा कैसे आ रही है, जबकि वो बिल्डिंग बन जाती है विद ओसी तो उसकी टैक्स कम कैसे हो जाती है. तो दिस एक्सप्लेन्स. दिस इज द फॉर्मूला व्हिच वी वर मेंशनिंग. सो इन दिस मल्टीप्लिकेशन फैक्टर, इफ यू सी slide 1, this, if you see open land, the multiplication factor of 1 which is being shown. Whereas in the apartment, it is 0.5. Second is the migration from 2010 to 2015 jab hua tha, because every 5 years they have to modify this. There is a limitation of 5 years of these guidelines. So first 2010 to 2015, then 2015 to 2020, another 5 years, which is lapsed. So now we are expected for another guidelines from 2020 to 2025, unless municipal corporation confirms this. So what they did in the earlier guideline, the residential land was kept in the table 1. Till 2015, it was in the table 1. In 2015 to 2020, they very cleverly shifted the open land to table 3, and they kept the house, the constructed house, in table 1. And because of which we became more expensive in table 3, which is table 1 was for the open flats, table 2 was for the shopping malls, commercial. If you can show, if we read through, shopping malls, commercial complex, theaters, offices, industrial estate, factories, we were in table 3, which is airport.
Kamlesh bhai, excuse me, there is Kamlesh bhai, there is some mismatch between the screen and what you are saying. If it could be coordinated, सबको समझ में आ जाएगा. Sorry to interrupt.
Okay. So the screen was to be played by Deepai. Deepai, can you show the screen on that table? Next.
You can refer to page number, I think.
Okay, I'll do it.
तो सबको समझ में आ जाएगा क्या exact calculation point of practically है ना?
Yeah. So if you can open scan document 3, which I had shared. Should I share from my screen?
Yeah, you can share it from your screen.
No, I'm not being allowed to. I think aapke isme se hi hoga. Just go to that thing na, which I shared. Not this next page. Just keep on scrolling. I'll tell you, Deepai.
This one?
No, keep going. Yeah, this one. Now, if you can, yeah, previous one. Yeah, stay there. Table. Now, if you see, if you can read. No, just stay on the previous page. No?
Table, Ritesh bhai.
Yeah, table. Yeah.
Table, sir.
Yeah.
Table. Yeah, just stay there now. Now, if you read residential user, this is table 1. Residential user, educational institute, read all the this permissible categories. There is no land. What they did, they shifted land from this table and shifted to table 3. If you see, just move to table 2 and table 3, the next page after this.
It's table 3, sir.
Yeah, this is the table 3. Now you see the land used is land for open theater, land for petrol pump, service station, kerosene station, golf course, amusement park, water reservoir. We have been clubbed up from table 1. We have been shifted to table 3. And what happened? Our taxes have become 3 times, 4 times higher by just quietly shifting us from table 1 to table 3. This was done by one officer just to meet the math balance sheet, because the shortfall of withdrawing the taxes of 500 square foot and below, how do we meet the total budgetary? This is how the bureaucracy did. They did not expect this will be going unchallenged in the house. To their shock and belief, nobody saw the technicality and it got through. And now we got trapped. We have been trying to reach that this table. Now in between, if you show table 2, now we are land. How can land be higher than a 5-star hotel and a shopping mall? If you show table 2, just before. Next page. Next page.
I guess.
Yeah, just turn table 2. Yeah, just go next page on this.
It's table 1 only, sir. We don't have table.
Table 1, table 2, table 3. There are 3 tables.
Sir, there is no table 2.
Okay, anyways, the table 2 shows 5-star hotel, shopping mall. So how can a land, a construction be expensive than a 5-star hotel and shopping mall. This does not require any explanation. This itself shows that these tweaking of shifting residential land under construction from table 1 to table 3 was done only to have a shortcut fixation of deficit in their budget. And this is where we are challenging that it defies a logic and principle. And if you see the impact, a land house 0.522, if you see at the bottom, the yellow marking we have shown, the taxes with the capital value comes to 0.522 here for an apartment, residential apartment as per table 1. Whereas you go to table 3, what it becomes? Go to table 3. It becomes 2.37. I am mentioning this. This is actually 3.5 for without service with sewerage tax, and without sewerage tax is 1.63. This totaling is error. 2.37 is 3.5. So the impact is straight away 0.5 has become 1.63, 300% and more. This is the impact, and this is what is hurting us. Now the second area of the formula. Just go to the formula. I will tell you. The calculation, Milind Bhai has already explained the formula on the previous page. Yeah, go on one page previous. Yeah, the formula which has been explained shows, I will read from my sheet. Yeah, the capital value of land is CV equal to BV into UC into FSI into AL. So base value, user category and FSI. Earlier 2010 and 14, they are 15, they were mentioning only the base FSI. Base FSI of Milind sir, please correct me if I'm wrong. For the suburbs was 1 and for the city was 1.33. So the base FSI, the FSI factor was continued till that time. It is only somewhere they tweaked base FSI into TDR, and somehow that multiplication factor has been introduced of FSI. So now we were shifted from table 1 to table 3. We were clubbed into golf course and race courses. We were not considered at par with even factories, commercial shopping malls. We were shifted to table 3. So we got 300% jump. We were in the multiplication factor in the formula, they introduced FSI and FSI with TDR. How can they charge TDR which has not been constructed? It is a derivative of a real estate. So this is how the tweaking was done just to meet the deficit of budget, is what the officers, when we were doing representation, were telling us in private. Unfortunately, it has now become a damage beyond control because it got approved, it got circulated, it became kind of an act. Milind sir and yeah, has been explaining. Yeah.
You can run through the slide because we just want to give, because other.
So now we have done a sample case. We have done a sample case for a 1,000 meter plot. Deepa, if you can show. Yeah.
Yeah.
Ritesh bhai.
Yeah. Shall I run through?
Kamlesh sir,
You can.
Kamlesh bhai, Milind sir has to go in 20 minutes, around 15 minutes.
Yeah.
So can we just take it quickly?
Go ahead. Yeah.
I have just to point out certain things to Dr. Sate's.
Let me cover this. I'll give you time. Yeah.
Yeah. This is main point. Plus, yeah.
What we've done is we have taken assumption of one plot of 1,000 meter, whereas we've taken ready reckoner land as a 75,000 per square meter and FSI as 2.5. The total built up area becomes 2,500, and this is a residential vacant land. And open residential land user category rate UC, that is 1. So we calculated capital value based on this 75,000 multiplied. So BV is your ready reckoner multiplied by UC is user category, FSI, and area of land. So this is the capital value. This is how it is calculated. Now, once this is calculated for open land multiplication factor, as Kamlesh and Milind said, it is coming to 3.518%. So, and that multiplied with capital value, your per annum value of amount of tax you will be paying, that is worked out. So that is here it is coming out to be 65 lakhs from 66 lakhs. Now, considering a project goes on for 3 years, 65 lakhs into 3 years, around 1 crore 97 lakhs is the only LUC you will be paying for 1,000 square feet of a redevelopment. and total LUC per square feet would be 735 rupees per square feet. Now, similarly, if same calculation is done for commercial, all assumptions same except a commercial construction, LUC will be 919 rupees. Now we moved ahead, we wanted to check, compare it with the post OC scenario. The post OC, it is 0.522%. So we took one example where plot area is 1000, FSI 2.5, built up area 2500 and so on. And the same working, yes, the mistake, this is 1,47,000, the same 75,000 example. And we worked out in a similar fashion to compare apple to apple. So tax for 1 year is coming out to be 49 rupees per square feet, and tax for 3 year is coming out to be 147 rupees a square feet, wherein for earlier example, similar example, tax for 3 year is coming out to be 735 rupees. Now what we did is we made a table. If your plot is in 70,000, 50,000, 75,000, 1 lakh, 125 and so on. So if these are your ready reckoner rates, your LUC cost is 490 to 1960 rupees per square feet. And most of the time in redevelopment in suburbs, you get half of the FSI, half goes for rehab. So effect on sale is, it comes out to 980 to 3,920 rupees a square feet. That is a huge amount. And what we summarize, what we worked out is we are paying LUC tax on rehab component also. So even from 500 to 2,000 rupees a square feet. Now in Mumbai, 4,000 rupees to be paid for redevelopment, where one side our projects are stalled, projects are not going ahead, and we are asking for installment concessions, and another side we are paying this huge amount of LUC. Now, if you see the earlier side, this is the 1470 is the effect on saleable area with 75,000 ready reckoner. So 1 square feet you are paying 1470, whereas same flat when it is constructed, the flat member is paying, flat owner is paying 147. So it is 10 times we are paying for using no amenities. Third, fourth, this is per square feet calculation. Now with this per square feet calculation, whatever is your FSI, multiplied by that FSI 345, and that amount will go up, and that will be the amount. So right now there is lockdown. In lockdown also we are paying the LUC. Litigation, delaying approval, Navy, any issue for which your project is stuck, your LUC does not stop. LUC is on for all along. That's it. That's the presentation.
Thank you, Ritesh bhai and Kamlesh bhai. Now we straight away move on to question and answer. Jaideep bhai, kindly take up.
And foremost, with the permission of Dr. Sathe sir, I would like to point out the last hearing at the Supreme Court where I was present. There is technically no stay, as mentioned by Dr. Sathe sir, that we have to pay 50%. There is technically no stay, sir. Justice Lalit passed a comment that I am fixing up the final hearing on 17th of March. And since I'm fixing up the final hearing, I do not intend to give 50% relief. And he was not even ready to accept that we give some sort of a bank guarantee to BMC or some sort of a undertaking to BMC. And he expected that we should pay full amount, because BMC argued that they would not be in a position to search the developer later on. So, and that contention was taken up by Justice Lalit, and he said, I'm not giving you any stay for that, but I'm fixing up final hearing, which was to start on 17th of March. As you are aware that the whole matter was with respect to the whole capital value system, the hearing would have continued for at least 2 to 3 days, and he had allotted the time accordingly. Justice Lalit had allotted the time accordingly, but unfortunately from 16th of March, the Supreme Court stopped functioning due to Corona, and that is why this hearing is in a limbo. Second thing, as of today, from 1st April 2020, there are no laws made by BMC or no rules framed out, which laws are effective only till 31st March 2020. Lots of representations have been made by various associations. Whatever anomaly Kamlesh sir has brought about by showing the calculations, all these things have been presented to at various levels at BMC and also to officials who were accompanying me at Supreme Court. Personally, they all are convinced with the things. but let us hope that sense prevails, and at least from 1st April 2020, they should reduce the taxes sizably. Uh, we were, I mean, the point in the court which would be argued was the law point. The irrationality of the tax or the percentage of tax, as per my understanding, it has not been discussed. The irrationality in the High Court order also, and also I don't hope that Supreme Court would listen to the abnormality or changing of table from table 1 to table 3 as pointed out. That would not be taken up. We have only to fight on the point of law whether there is a third category of tax allowed to BMC or not under the various sections of, as mentioned by Sate sir, under 139, 140, 154 charging sections and all that. Based on that, we are supposed to work only on the chargeability point. That would be our only thing. Yes, we have pointed out that a completed building tax and under construction tax, you are paying almost 2.5 times, because if you consider the I mean, water and sewerage tax benefit, the tax from 3.51% goes down to 1.63%. Still, compared to 0.359% in a completed building after getting water connection, it is 5 times. So that is also sizable. As rightly pointed out by Kamlesh sir, yes, this was due to some officer in 2014-15 who played mischief, and this thing has happened and we are the sufferers. But let me point out that capital value itself, we have not challenged it. We have only challenged the land under construction tax in our petition, which is the main petition. And also in 2014, when we had already challenged it, and still BMC went ahead with changing the provisions and made it into table 3, which was purposely done and which has been also pointed out to courts at times. Justice Oak, if Sate sir can clarify on that. When the first time he mentioned, Dr. Sate mentioned in the court that this type of tax has been levied and it is more than a completed building tax. In fact, Justice Oak was also surprised that how can such a tax be made that a completed building has a lower tax and under construction property has a higher tax. This has not been brought in writing in the order, but this was openly said in the court that this is not possible. I think Dr. Sate can ratify my statement. I am hopeful that we will win in Supreme Court. Only point with Dr. Lalit has, Justice Lalit has in his mind when he did some comments that the base rate which is shown in the ready reckoner is for FSI of 1. What he is trying to say is that if your base rate is for 1 FSI, the property value definitely increases if the FSI is made to 3 and 4. But Justice Lalit needs to be explained that out of 3 and 4 FSI, 2 FSI normally goes to the existing occupants. So we are left with only 2 FSI. And we are bearing the cost of construction of that tenement, whom we are giving free of cost, bearing all the cost of that tenement to be constructed. So finally, we are landing up with 1 FSI only or 1.2 FSI. For that, we should not be, the value of land cannot increase by, if the FSI is 4 times, it should increase by 4 times. It has to increase by hardly 1.2 times or 0.3 times, which is the component of our profit. That's all. I mean, this anomaly needs to be brought before Justice Lalit, which I am already taking up with the councils, and they have agreed to look into this matters. We are really unlucky that had 1 week more been there, then the hearing would have completed by this time and we would be awaiting the final order. But now I don't know when this hearing would be taken up after Corona and when the final hearing, I mean, days would be given to me.
Thank you, Jaideep bhai.
Yeah.
Nero bhai, can you please take up the next question? Nero bhai?
My question is that the building is in the final stage of occupation, and the BMC is demanding assessment for the total period of construction, wherein we have paid only 50% and balance 50% is not paid. So is there any way out of this by giving something by bank guarantee or something, or is there a legal provision for this?
Insofar as cases where occupation certificate is asked for, the courts have not given any interim order from 2014 onwards. In fact, they have said once you take occupation certificate and put the purchasers in possession, then they should not suffer when the actual demand comes. So if you are seeking occupation certificate, they would be justified in asking for the full amount of deposit, because that has been the trend from 2014 onwards.
This was brought to the attention of Supreme Court also in my last hearing, that the builders would be liable to pay such heavy taxes. So kindly reduce it to 50% or give a stay. But Supreme Court was reluctant on the same point, that the developers would run away finally. And that is why, by giving undertaking, in fact, I had offered for bank guarantee also, and that was also not accepted. But court accepted to place the final hearing, because there were lot of writ petitions, so court would need to unfortunate corona, it is delayed.
Thank you. Can we,
Thank you.
Ritesh bhai, can you ask the next question? Ritesh bhai, I think he was not there. Anyways, we are having lots of questions. I think we'll need another session of Sathe sir for this. We'll sum up here, and thank you very much, everyone. In almost 1.5 hours, we have understood quite a lot about LUC, which we struggled for years. Dr. Milan sir, from the whole dialogue today, I have understood one thing. We as a developer have been subjected to a very unjust methodology of levy by government of this tax. This is unnecessary, increasing our cost, which is indirectly bared by the flat purchaser, making their homes unaffordable. With my president and vice president and other office bearers' permission, I would like to say that we at BDA will form a special task-based committee, especially for LUC. As I understand, the formula for next 5 years is due, and Dr. Milan sir can help us in formulating some good presentation, which we can appeal on behalf of the association, and we can do whatever possible we can. So now I would like Harish bhai to take over and give a vote of thanks.
Thank you. Thank you so much. Sathe sir, you have given your best, and it was really a good explanation and good thought of knowledge been shared by you to everyone. LUC is a really very, very burning topic for the entire industry. And as rightly said by Deep, sir, we would be taking this matter in a great level to get justice to all the developers, wherein the fact today has been lot clear to everyone that a constructed flat is being charged far less than a land under construction, and various issues which have been pointed out point to point by Kamlesh bhai as well as Ritesh bhai over here. So in this regard, we all the developers will have to come together, and it is like we are paying the table which has been compared for the developers, that we are paying from 960 rupees to 2,900 rupees a square feet on a sellable component, which is a huge cost, and no developer takes into consideration this amount of costing when we calculate a project for redevelopment. So day by day, the redevelopment viability, feasibility is really going out of our hands, and Mumbai in this way will never be redeveloped, and already many issues related to premiums, ready reckoners, stamp duty, all these major issues are already in front of us, and this issue was an eye-opener for all of the developers in the industries. So surely we'll take up this as an exclusive chapter in BDA and make sure that nothing is left to get these issues resolved, along with CDMA, as well as sir will require, and Kamlesh ji, who has been already in this fight since long from Naredco, and Sathe sir, we really thank you, and we require your support all the way till this matter is not resolved. So we will approach you whenever required. We take this liberty on this platform, sir. So we request your help all the way till the matter is resolved. As today BDA is fighting on all the fronts instantly and taking all the corrective measures to get the major issues resolved, which have been seen in all the webinars. So I thank you everyone over here, present over here, sir, Sate sir. It was extreme pleasure to have you on this platform. Our president, sir, Jaideep Bhai, Kamlesh Bhai, and all our committee members and all our participants. A big thank you to all. And one request, in order to fight all these fights, all the developers present here, I request everyone still who have not been member to BDA, kindly enroll yourself at the earliest to become member of BDA. Now even the website has been open. You can get all the details from our website, that is bdamumbai.com, and become the members to take over this fight. And let's get it done from wherever it is possible, however it is possible. Thank you. Thanks a lot. Thanks again, Milind sir. Thank you so much.
Thank you, Milind sir, very much. Thank you.